What's up, everybody, and welcome back to another episode of the Arizona Monthly Housing Market Update. I'm Katie, and
I'm Matt, and
Ryan. Happy October, everybody.
Did I do that
October.
totally different again? I love
Yeah.
throwing you guys off. It's kind of funny.
Yeah, keep us on our toes.
You know, you need that on a Thursday morning at the beginning of October, like you mentioned. It is my favorite spooky season. We are coming up on it. I love this month because, of course, in Arizona, we're starting to get some cooler temps, which is nice. The weather is just absolutely lovely from here on out, right, guys?
Yeah.
Not this week,
100%.
but I see on the 10-day forecast, I think we're like 95 highs at in like a week and a half. So I'm ready for that.
Yes, true that. I think this is the last of the triple digits.
Yeah.
Y'all can let me know if I'm right or not next month, but I think this is it. Usually we like one of those heat waves before it cools down, right?
Oh, yeah.
If I remember right, every year. Yeah. So anyways, let's hop right into what's on everybody's mind, Ryan, and that is the rate update. What's cooking over there?
It's been an eventful 30 days since our last recording, and as we predicted, at the beginning of September, the Federal Reserve, they cut the funds rate by 0.5%. And just a reminder, the funds rate doesn't have a direct impact on mortgage rates. The funds rate really impacts what banks pay to borrow money. So this really impacts short-term consumer debts like credit cards, car loans, personal loans. So really, the Fed is worried that they have kept rates high for too long, and they're trying to prevent us from going into a recession. So, spending right now and hiring has slowed, and that's really what they're trying to do to jumpstart the economy. So this is why they're really focusing on dropping the cost of borrowing, and that's more quickly than estimated. They were supposed to do only a quarter, but they did a half. So now, this will eventually help mortgage rates, because it is saying that the Fed believes inflation is under control. And as we speak about a lot, lower inflation means lower mortgage rates. That's really the main driver. So inflation is getting closer to their 2% target. It's way down from 9% last year. So that's great to see. So consumer goods are going to get cheaper. Borrowing will be cheaper. And, this will really help the economy and will help mortgage rates. But the only predictable thing that we have is unpredictability, right? Recent national and global events could really impact the drop we had in inflation and really impact the Fed's future rate cuts and mortgage rates. So, for example, I know I mentioned this, Katie, in the Monday update I sent out. There's one thing: port workers are on strike. This is on the Eastern and Gulf Coast, and this will limit, the goods that are going to be available and increase inflation. So we hope that ends pretty soon. And of course, there's a conflict in the Middle East, that could impact gas prices. There's been a hurricane. Horrible to see that. And we did have a strong jobs report this week, which was unexpected. And all of this, could really pressure mortgage rates higher because it all is inflationary. It could increase inflation. So, over the past week, as the news has unfolded, even though the Fed cut rates, we actually saw an increase in mortgage rates. So we could just hope for, things settling down and resolutions to some of these global events. So, it's going to be a busy last quarter. We, of course, have the election too. And we'll be here to cover all of it.
Yeah, absolutely. And what kind of conversations are you having with your people these days, with your clients that are coming in, filling out mortgage applications and that kind of thing, when they ask you this question? Hey, Ryan, do you think that I should look at buying now, or should I wait until after the elections and see how things pan out? Are you having those conversations? Because we certainly are.
Absolutely. Yes. And so there's two different ways of looking at it, in terms of mortgage rates. We are at lows for the year, and we haven't seen rates this low since the beginning of last year. So it's very positive. And we don't know, and like I mentioned, there's going to be things that happen that impact rates. We can't really predict these things. But so we really just kind of go over payment. Are you happy with where this payment is at,
Right.
with this current rate? Do you want to do a buy down? Do you want to do one of our other 2-1 buy down options, which gives you a much more discounted rate for the first year? So we really just kind of focus on payment, and if they're comfortable with that, knowing that in the long term, rates still are going to go lower. And you always have the option to refinance as that happens in the next year or two. So even though in the short term, we might see some spikes here and there, in the long term, we will get better interest rates. So, and refinancing is always the option. I know we always talk about this where, date the rate and marry the house. Find that right house, but know the rate could be very temporary and refinance as things go down. And we are seeing it as being a good period to buy right now. There's definitely some good
Yeah.
deals out there. We're seeing more inventory go up, and we do think a lot of buyers are still kind of on the fence as there's uncertainty if rates will go lower, the election. There's a lot of things going on. Are you guys seeing that too?
100%. And I just had this conversation last night with yet another buyer and got the same question. And what I said to him was, what we have right now is we know what we're dealing with, right? Like we're in the know. Like we know where prices are, we know where rates are. We don't know what's going to happen after the elections, but we do know that our buyers in certain areas especially are getting some really great deals right now in terms of concessions, in terms of money off the price of the house, in terms of repairs and things like that. And where we have information that has been shared that shows us that yes, interest rates can and should come down at some point in the future, right now is what we're dealing with. And does that make sense? Like, and that's the conversation that we had was, hey, after the elections, who knows, we may have more buyers come into the market and start to eat up this inventory that we have accumulated over the last couple of months. And that might change your opportunities in terms of these certain incentives that you can most likely get right now. And that's the conversation that we've been having. Have you had that similar conversation, Matt, or had any conversation like that lately?
Yeah, absolutely. And I think, like you said, we're in a time right now that it seems very volatile, but almost like this short-term volatility where you have a lot of data that's saying economy's good. It's not terrible. Obviously, people are feeling inflation effects where goods are more expensive. But at the same time, when we really look at the high level economics of things, there is a lot of certainty. We can see that in our own luxury level of properties here in Arizona, that they're still moving. Like you said earlier, before we were talking, Paradise Valley actually has spiked here. And Paradise Valley is going to be our most expensive zip codes in the state.
Right.
And when you start looking at that and saying, all right, well, luxury is popping in these areas, could be seasonal, but regardless, it means there's confidence there. There's confidence in people that own businesses. There's confidence that are people that are really looking at this at a high level. And I think that says a lot. I think with any election, there's going to be volatility because you have ultimately two sides that are both sharing a narrative that pick one side, the world's going to end. Pick
Right.
that other side, the world's going to end. So rightfully so, people are very, very nervous and scared. And when you start really digesting all this on a personal level, it really does affect people's confidence in spending, and especially when it comes to purchasing a home. You also see that both of these candidates are kind of, using their campaigns to, get everyone excited on why they would be the best candidate, and they're using housing, as that stump to yell upon. And they're saying, we're going to give incentives, we're going to do this, we're going to do that, where it can be very misleading to people because what are you waiting for? And I think what Ryan said is the most important thing is to really just kind of turn the noise off from outside and look inside. And what inside's going to be is your personal situation, your personal family, and saying, what is best for me? What are we really looking at this? Is this a purchase of a home that we're going to be in very short term, or is this a home that we're going to be in for a bit? If that's the case, don't get caught up in all this up and down and trying to find the best time to purchase, because you drive yourself crazy. It'd be like looking at your 401k every day saying, when should I sell and when should I buy back in? Even the most experienced traders in the world get it wrong more than they get it right. So same with real estate investors. So the best thing to do is what's best for you. At the same time, you're going to protect your investment and what's best for your family, and you're going to probably save yourself a lot of stress because, trying to make these decisions and digest everything that's being sent over the news waves is just going to cause you to go insane.
I absolutely agree. And I think something that you said is really, really important in there. Of course, it was all valuable, Matthew, but there was something that I picked up on that's really important, is that most people stay in their home for 3 to 5 years.
Yeah.
And they're, you know, the ones that are maybe the short-term investors, okay, I can understand how you want to, you know, time the market as best you can kind of thing. But if you're going to be staying in the market in your home for 3 to 5 years or more, that's usually the amount of time that it takes to, you know, get any fees that you've paid and any costs and anything like that, like get that back, right?
100%. And the other thing that you got to really look at here, guys, and everyone has to look at, is our inventory. Our inventory is still not back to where it was pre-pandemic. We are still very, very low, right?
It's gone up in the last few.
No, but I'm just saying, like, it's not back to the levels that we are used to.
Right.
It's still very much in a position that, and then when you look at what's on the market and what's being offered, that could literally dry up in less than 30 days if we have a big rush of buyers, if all of a sudden all this confidence comes back. And that shifts things quickly. So when people are really looking for this perfect time to buy, you got to ask yourselves, what's most important? Trying to get the best deal in this little period of time, or getting the best home for my family? And right now you have selection. Go back to where we were 3 years ago when we were in a hot market. You didn't have the luxury of really choosing what you wanted for a home. You had to kind of deal with what the supply offered, and it was very little and highly competitive. So that's where I think it's super important for people to kind of maybe put that, hey, trying to find the exact right time. No, find the exact right home. Make sure that you're comfortable with the exact right situation with your finances by speaking to someone like Ryan and making sure you're not biting off more than you can chew. And then have that plan for, okay, when rates do adjust, we can capitalize on that, get a better rate, and have the home we love, versus waiting too long, then saying, oh, great, rates are amazing. And then you jump into it and you realize, wait, there's not a lot to choose from. Rates are low, but guess what? I'm paying a lot more. I'm having to compete and come out of cash out of my pocket a lot more. And
I'm taking care of repairs. Really in a better situation. Right. I'm taking care of repairs. The seller's leaving the house with a bunch of junk in it because it doesn't matter. They don't care. They're not paying for my buyer's agent. They're not paying for my closing costs. They're sticking to their list price, or we're having to go higher. Like, these are the things that buyers have to deal with when there's more demand in the market. And that is exactly the conversation that I had with that buyer, was the demand in the market's a little lower right now. And we're seeing these incentives out there aplenty. So let's talk about these buyers markets where you can go and get a really great deal on a good home for your family. And 100%. You know, that those were the basics of the conversation. And to speak to what you said, Paradise Valley shot right up, crazy, in a crazy seller's market right now, shot right up in the last couple of weeks. So everybody's getting back from their summer homes, I guess, maybe. But I wanted to mention, for those out there that are in the buyer's seat right now, and you're having to make this decision, or maybe you're in the car looking right now, but your buyer's markets to kind of keep an eye on, guys, are still very similar to what we've been talking about the last couple of months. And that's going to be Queen Creek, Buckeye, Maricopa, Goodyear, Surprise, Casa Grande, and Litchfield Park. Now, what is similar about all of those properties, or all of those cities, Matt?
They're all underlying.
They're outerlying, and they have a lot of builder inventory. So we're really noticing with our resale properties is that our sellers are needing to become a bit more competitive in these areas, because they're competing against the builder inventory for the buyer pool that is a bit slimmer than what we have been dealing with, you know, over the previous couple of years.
Yeah. And to speak on that real quickly, and I think it's important for any seller that's in that situation to go into this with confidence, but really making sure that you have the right agent, because that's going to make the difference.
Oh, huge.
You really, really, really need to explore what your driving forces are in selling. If you're in a situation that selling is not, it's not an option, you have to sell. Then, you know what I mean? You're going to probably have to take a little bit more of an aggressive stance. Timing sometimes isn't favorable coming out of the summer in these areas, but I have to say there is a lot of light at the end of the tunnel. One of the things is you can kind of see inventory is dropping on a new build front in these areas, because a lot of people are going to them. So you're going to see this kind of seesaw, people saying, oh, jumping from resale to the new builds because they can offer better incentives. And all of a sudden the new builds start to not offer the same incentives or less. And then people say, wait, it behooves me to look back at resale.
Yep.
Same with resale in a lot of these markets. There seems to be a lot, but we're talking maybe 15 to 20 properties in this certain little section that one person might be looking for. Those properties to dry up and go off the market, it happens very quickly. And we've seen it over the summer, and that's where you get that seesaw effect. So that's where I really give, advice to sellers just to remain confident, rely on your agent, speak to them real time, look at the data, don't make knee-jerk reactions.
Yeah, very, very important to make sure that you have the right representation, right? Because what I am finding is the properties that are showing well online. So they've got nice photos. The property looks as though it's been cared for and it's ready to show. It stands out from the crowd. There's not just like 3 crooked pictures with a cat in it or something like that. Like that used to work maybe when there was 0 inventory. But what I'm finding is the more that you can set your property apart, the more you can make it look and feel like a unique opportunity, the better these sellers are doing in these areas of somewhat intense competition.
Yeah, absolutely. Ryan, what have you noticed on the appraisal front right now? Have you noticed any differences in values with appraisals, or are you still seeing it just no issues with appraisal?
Yeah, we are seeing some values coming in a little bit lower over the past 30 days. As you know, as I'm talking about rates going down, we are doing more refinances right now. So we are seeing some of those values come in less than what you see on Zillow or what our estimates came in at. And sometimes it could be driven just by maybe just that one house that, there was a seller that was just very motivated to move, and that's one thing that we've really noticed. And part of the reason we're seeing a lot more inventory is people have been house locked for so long. They had rates in the 2s and they're like, I don't want to move. And finally, as we start to see rates, in the 6s and 5s, they finally feel like it's time to list that home. So some sellers out there are very motivated and are okay taking a little bit of a cut, especially if they have a lot of equity. So we have noticed that, some of those, listings that do slash their price a little bit just to get rid of it have been impacting prices.
Yeah, that makes sense. How are your applications?
We're keeping pretty busy, actually. Applications have picked up, but we still have a lot of people just kind of wait. There's a lot of wait and seeing people out there. Let's wait and see. Let's wait and see. And a lot of people trying to time the market. It was kind of interesting. Just yesterday, I was listening to a podcast from Tarek. Tarek I think is his name. He did Fix or Flop, that popular HGTV show. So he's been investing for 20 years and doing these fix and flips. And one thing they asked him, like, what's the biggest lesson you've learned in this 20 years of investing? And he's like, you can never time the market. You never can. No matter how much you think about where things are going, what you're waiting for. He says, whenever I waited, I always kicked myself for waiting because values always go up. And he gave a great example where his first house he ever bought as an investment was in Charlotte for $150,000. But it was one of the worst times you could buy. It was 2008. And we all know what happened. The Great Recession, values did drop. It did drop to like 90,000. And he was like, oh my gosh, this is the worst investment ever. He held on to it. And now it's worth about $400,000 and it's paid off from his renters. The renters that he's had in that house paid the house off. So what he thought was the worst investment was a very, very good investment. So you can't time the market, and just know that in the long run, values always do go up. And yeah, so it's a good lesson, I thought.
It's a great lesson. I mean, every time I have bought a house, somebody out there has said, oh no, don't buy yet, wait.
Okay.
Especially when I was younger. And it always worked out for me. And I always made a profit on it. And it always was a great stepping stone to the next property or the next chapter, whatever that may be. Always.
Yes.
Yeah. No, 100%. And I think buyers can take advantage of that right now.
Yeah.
Because I do think everything that we're seeing, the long term in Arizona looks very, very fruitful. And you don't want to get caught up focusing on the now, on these little short-term things when you're really trying to look at value on a long-term investment. If you were saying, hey, you know what, I'm buying this home to sell in a year, you're really not acting as a home buyer, you're acting as an investor. And that's a whole different conversation.
Right.
When you're purchasing this for your family and you're like, I'm going to live in this for potentially, a long time, or even turn it into a rental later on, that's a long-term investment. You really need to look at the long-term scope of this and then build your plan around that.
Yeah.
And once again, not to, beat the same drum, but if you can formulate a comfortable mortgage and you set up your budget, everything else doesn't matter because it's locked in at that point. And if things do get worse, hey, guess what? You're still locked in at that mortgage. Don't be blinded by looking at that because it will go up. Hey, if things go great, that's awesome. But this should take the same advice. You know what I mean? Still stay humble, still stay focused because things can change. And if you can kind of just follow that plan, yeah, in 3 to 5 years, more than that, whatever, you'll look back, you'll be like, this is the best investment I've made. I'm so happy I did this.
It's a lot less volatile than renting. And I don't think people understand it until they actually become homeowners.
No, absolutely. And to your point on that, rents right now, our rental market is not mirroring at all what we're seeing in sales. Sales has been trickling up around 1% each week. The rental market hasn't. It's been staying flat, going down. During our summer seasons here in Arizona, it's usually a harder hit because you have everyone that's left for school. All the snowbirds have left. No one wants to move in the middle of the summer. So then you're stuck with inventory and people that are desperate to get their homes rented, landlords that didn't plan it right. But we're not seeing that spike like we've seen before in inventory, and rents are remaining. So
Yeah.
I think that says a lot.
Yeah, I had a lady that just texted me last night, and she's owned her home up in Anthem since 2016, and paid 300,000, something like that for it. And we've been talking a lot about renting and buying another property and beginning her portfolio. And she texted me last night, and she said, "Oh my gosh, I know about Zillow. Like, I know I need to talk to you also, or instead of believing Zillow, but Zillow just told me that I could get $4,000 a month for my house, and that's just insane." But just another example of what real estate can do for you.
Oh,
Yeah, 100%.
All right, guys. Well, that was action-packed with a lot of value. Anything else that you'd like to add before we sign off this month?
One thing I would just like to say, and it really kind of it goes to Ryan, and I think the best first step for anyone that's even thinking of buying, it's so important to talk to the lender to get a good feel on where you're at. And I think a lot of people are very nervous to take that first step sometimes. They like to live a little bit in the dream world where they're looking at their houses and they don't want to squash that dream by sometimes seeing the realities of finance. And truth be told, I'd say most of the time you're going to be pleasantly surprised on what you learn. The other thing is if you're not, you're going to have a good path. And that's where Ryan would come in to help you, create that path. So now you actually have some tangibles. And that is the best first step that anyone can do because now you're ready. So if you don't want to buy now and you want to buy in 5 months, you're not lying to yourself. You know where you stand. And then you're in the position to capitalize on opportunity. And that's what luck is. Luck is inevitably when preparation and opportunity meet. So
absolutely. And I love that you said that because I tell that to all my buyers. Even if you think you're not ready now, it's still such a good, it's always a good time to get a feel for where you're at, because there could be some things, right, Ryan? This happens all the time that pops up where someone's like, "Ooh, I forgot about that," or "Yikes, I didn't know about that." And when we have more time to react to those things, fix those things, get ourselves in a better position so that we can get into a better loan program, perhaps, right? I mean, that's why we want to fix our situation. And that's where the time comes in, and it can be very beneficial. Whereas if somebody sees you 2 weeks before they need to get out of their rental, that's a little bit of a different story.
Yeah. Great way to end the podcast, guys. Call Ryan. I appreciate that. But yes, I completely agree. It's good just to kind of know where you stand. We do have people who think they have 780 credit scores because that's what they see maybe on Credit Karma, but something pops up and it's below 700. And, you care so much about where rates are at, but just knowing getting that extra 40 or 50 points can really help your rates, open up more mortgage programs. Yes. And what do you need to do to get there? So just it's a great way just to kind of know where you stand. We do a lot of soft credit checks, so don't be afraid to do a hard credit check, which does have an inquiry and could drop your scores a little bit. Our soft credit checks show us exactly where you are, and it does not show up as an inquiry on your credit report. So we can still give you guidance and not have that impact that a lot of people are afraid of. And of course, kind of put a budget and put a plan together to eventually get you into a home. So that's what we do.
Awesome. Yeah. And that article is not a giant impact either, right? Like we have talked about this. We've got a Tip Tuesday video that I'll pop in the show notes. So that way, if somebody wants to get a little bit more info on that straight from your mouth, they can do so, because that is a conversation that we have a lot. That is a fear that is out there, that we come across quite a bit. Well, thank you guys again. I appreciate you as always for being here with me. And thank you all that have been following us for years now on the Arizona Monthly Housing Market Update. You can catch any of our previous episodes. I always like to say, go back and test us and see a year from now if what we said was going to happen this past year actually did. I dare you. And then comment below and let me know if you've done that and let me know what you found. Over at Team Evo AZ, that is our handle on YouTube. The very first playlist on our homepage is the market update. So you can't miss us. If you prefer the podcast style, hop over to your favorite podcast platform, do a quick search for Arizona Real Estate Radio. There you can find us, rate us, click the little bell for notification, download, do all the things. It's really beneficial and helpful, and it helps us get the real news out to the real people. Thank you guys so much again. We'll see you soon.
Bye, everyone. Thank you.
Bye, everyone. Happy Halloween.